the system is broken and the government can never stop printing. This is Lynn's fabulous meme, you can't stop this trade. I mean, you can either decide you're going to hold your savings in fiat currencies, in debt, or to some degree in stocks, or you can say I'm going to step out of that system and put my savings in something that can't be printed. And the three things that naturally come to mind are Bitcoin, gold, and silver. So, and I think what's happening is just more and more people are coming to to choosing box number B. Okay, I get it. I know what's going on, and they're not going to fix it, so I better be over here. So, it could get kind of crazy. I mean, I think when Bitcoin takes out 73, I think this cycle, I agree with Max's numbers. I think we're easily going to be in the high 200s, within 6 to 12 months.
Lepard begins by identifying the record high prices of gold and Bitcoin as symptoms of a sick monetary system. These assets are behaving contrary to traditional expectations around interest rate movements. Usually, as real interest rates rise, assets like gold and Bitcoin would lose appeal. However, Lepard explains that despite increased real yields, gold and Bitcoin have remained resilient. He attributes this to a market realization that the Federal Reserve's short-term rate cuts have led to rising long-term yields, signaling growing skepticism about the sustainability of government debt. Lepard suggests is not immediate but will be evident when the prices of non-fiat assets rise significantly. More people are realizing the unsustainability of fiat currency, opting instead for gold, silver, and Bitcoin, assets that cannot be manipulated or printed at will. He predicts a surge in Bitcoin's price, potentially reaching $200,000 within 6 to 12 months once it breaches its previous high of $73,000.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We know something is wrong, because the price of gold and the price of Bitcoin the price of gold at a record high. The price of Bitcoin is bumping up against its old record high, and I think soon we'll break through it and go down to much higher highs. And so these two things are canaries in the coal mine that warn you that the monetary system is sick. In theory, this should not be happening. I mean, they've diverged from real yields. So, real interest rates, have gone in the, generally speaking, when real interest rates, Powell pushed the rate up and raised real interest rates, that should have made gold and Bitcoin go down. It made them go sideways. And now, as he started to ease again, they're strongly going up. So the other thing that's interesting that's happened recently is that he cut the short-term rates, but the long end got away from him or is getting away from him. I mean, the 10-year yield has gone up substantially since his cut. So, what I think all this is there's a slightly different tone in the markets that is coming to realize what you and I have known and what many Bitcoiners have known for some time, which is that the system is broken and the government can never stop printing. This is Lynn's fabulous meme, you can't stop this trade, right? I mean, it's baked in the cake. I mean, another data, there are all kinds of data points. I mean, one data point is, U.S. federal interest expense, it's up over 1.2 trillion run rate. Or, the chart that showed the jump in the U.S. federal debt right after September 30. They closed the quarter and then added between $400 and $500 billion of debt in a matter of a week or two. I mean, it's just everywhere you look, you see signs that things are breaking. And then, you've got extremely smart investment managers like Paul Tudor Jones, who's self-made billionaire through investment management, and saying, look, inflation is the escape valve, or inflation is the way out, and that's why I own gold, commodities, and Bitcoin. And he's no dummy, right? So I think that, but that he wasn't on TV saying that 2 years ago. I mean, he was kind of supporting Bitcoin a couple years ago, but and others are saying it. Druckenmiller is saying it. Arian is saying it. Gunlock is saying it. I mean, even Jay Powell said it. Jay Powell said, this deficit cannot go on forever. He's right. I was kind of shocked he said it, to be frank. I was kind of like, okay, so why are you enabling it? But something's got to give, right? And so that really is the $64,000 question. What's going to give and when's it going to give? And none of us really know. But I think what will inform us of when it's giving are the prices of the alternatives. I mean, you can either decide you're going to hold your savings in fiat currencies, in debt, or to some degree in stocks, or you can say I'm going to step out of that system and put my savings in something that can't be printed. And the three things that naturally come to mind are Bitcoin, gold, and silver. So, and I think what's happening is just more and more people are coming to, they're choosing box number B. Okay, I get it. I know what's going on, and they're not going to fix it, so I better be over here. So, it could get kind of crazy. I mean, I think when Bitcoin takes out 73, I think this cycle, I agree with Max's numbers. I think we're easily going to be in the high 200s, within 6 to 12 months. So, and I don't think, there are a lot of people saying gold is at 30 or 2,700 now. And I'll be saying, it's going to go back to 2,000. It's just, it's just a spurt. It'll come back in. And I strongly disagree. I think gold's going to 3,000 or 4,000 on its way to much higher for a variety of reasons. So those are the kind of the signposts that I think we should all be watching. The other one is the debt market. I mean, if we continue to see the long debt rates, interest rates go higher, that will mean that there are fewer buyers of the debt. And I suspect, all this at some point is going to create tight financial conditions that the Federal Reserve is going to have to create an excuse and react to. And, the reaction will be what they have always done in the past, which is they will cut interest rates and they will initiate QE and print money. And then if it gets bad enough, they'll initiate yield curve control and say, we are going to hold these yields at this level. And at that point in time, anybody in the world who doesn't understand that they can never stop printing, it will be just completely brain dead. At that point in time, our stuff's going to go nuts. And it'll be, to me, we're in the end stages of, this great fiat, Keynesian fiat experiment. But these end stages could still take a number of years. I don't think it's not like we're going to hyper-Bitcoinization next year. I mean, I think we've got a bunch of, we've got more swings back and forth, back and forth, back and forth. But one can see the long-term trend, and it's pretty clearly in our favor. So gold is analog sound money, and Bitcoin is digital sound money, and silver's not even money anymore. I mean, it is, but it's been kind of demonetized by gold. The silver-gold ratio is really, it's kind of amazing. However, silver is a very critical metal that's used in a lot of applications, so that it's got kind of a dual role as somewhat of a monetary metal, but also an important industrial metal for solar and electronics. Look, Bitcoin is going to demonetize gold. That's just a fact, in my opinion. It will flip gold, and it will, gold will go down to its jewelry value, and some, a lot of the premium will come out of it. But I caution people to say, not tomorrow. This is a multi-year, arguably multi-decade process of that taking place. And in the scheme of things, gold and silver are still way, way better than fiat, in the environment that we're currently in. And so, 8 billion people kind of intrinsically understand that gold's money because we've had 5,000 years to prove it. As we know, the number of us who understand that Bitcoin is money, it's a much smaller number, and it's growing rapidly. That's why Bitcoin's going to outperform. But it's going to take a long time until it sinks into everybody that this is the base layer of the monetary system. But I think it will. I think certainly within 20 years it will. But 20 years is a long time. So, but I think of them in terms of, and when I recommend investments to my clients, you should hold all three. And the weighting should be based upon your tolerance for volatility, and your tolerance for risk. And because while Bitcoin is clearly going to be the highest performing, it's also the most volatile. So, for somebody who's 80 years old to have 100% of their money in Bitcoin, be able to watch it maybe go down 50%, well, that's scary. They don't want to do that. But you don't need to have all your money in Bitcoin. If it does what we think it's going to do, just having 10 or 20 or 30% of your money in Bitcoin is going to be an enormous win. And so, everyone can make their own choices. I mean, sure, if I were 30, I'd have all my money in Bitcoin. I mean, I think most 30-year-olds should, but that's, obviously everyone makes their own choices.
Bitcoin adoption is the approval of Bitcoin ETF. Initially, many doubted whether the government would ever allow such products, but now that they are accessible, institutional investors are showing greater interest. Larry Fink, CEO of BlackRock, has joined the ranks of prominent Wall Street figures who see potential in Bitcoin, marking a significant shift in mainstream financial sentiment. This acceptance by traditional finance players, Lepard explains, is similar to the adoption of the Internet, which faced skepticism before becoming ubiquitous. He compares Bitcoin to the early Internet, emphasizing that while initially misunderstood, Bitcoin's utility as a base layer for a future financial system will eventually become self-evident.
And there are a number of things I think he pointed to, and I would just emphasize them. I mean, the adoption of the ETF, right? I mean, before that happened, most people in the United States, a lot of my friends, oh yeah, that's all great, but the government's going to kill that, Larry. They're just never going to let that happen. Well, then the ETF got approved, and it's kind of like, okay, that's different, right? And then some big Wall Street names flipping in our direction. I mean, I'm not a big fan of Larry Fink because I think he benefited unfairly from the fiat system, but he's not a fool. And he looked at it, did the analysis, and came to the conclusion, well, I've either got to, join this thing or be wrong. And he decided to join, and so he now believes. And I think that's the process that takes place with any kind of a new innovation. There's initial skepticism for some very legitimate reasons. And then as the skepticism is overcome, you see more and more adoption. And then, 10 or 15 years from now, I mean, my kids, you when you're older, a lot of other people, it'll just be self-evident. Like, of course this thing was going to work. And I had the same thing in the internet. I mean, okay, you can hook these computers up, you can send emails. Who cares? Who wants to do that? It's not really that important a thing, Krugman says the fax machine. Well, yeah, okay, but yes, you're right. It's a little slow, and you got to dial up now, and it's annoying. But guess what? It's going to get better. And here we are, X number of years later, and you and I are talking halfway around the world from one another in real time, video conferencing, something that used to be extremely expensive. I mean, the implications of the technology and how it's changing our world. I mean, you just can't ignore these things. And to me, this is just the internet 2.0. I mean, and arguably it's even bigger and more important because the internet was dealing with information and communication, which is damn important. But this is dealing with money. This is dealing with a base layer, the thing that we all need. I mean, you can live without the internet. I mean, theoretically, you kind of can't live without money. You can't feed yourself. So it's a big deal, and it's coming. So, to me, it's just inevitable. And so the fun part is we get to sit back and, we get it, and we get to sit back and kind of enjoy the ride. And then I think our job is to try to save as many people as we can and to try and help and educate others so that when these changes occur, they're on the right side of them. I mean, I feel really sorry for people that don't understand this and for people that are trapped in fiat land, because I think that, economically they're going to suffer on a relative basis. And they don't need to. If they were to open up their mind and read Safe's book, it's hard once you've actually taken the time to do the analysis. It's very difficult to come to any other conclusion, which is why when I start orange pilling people, I'm just patient, and I'm like, no, I just keep chipping away at it. I've had a lot of people who were very skeptical in the beginning who are now full-fledged Bitcoiners. But it didn't happen in a day. It took time, and that's how it's going to be with society, right? I mean, as I said earlier, it's this tipping point thing. And so back to Saylor's, this is the gold rush. Yes, I think this is the gold rush. I think we're in the time frame where this goes from just being a fringe crank, group of what they call psychopaths, right, to oh my God, of course I've got some Bitcoin. Everybody does, don't you? Yeah, that's a good performing asset, and it's hedging against the future. I have some of that, and maybe it's not very much. Everyone starts off small, but eventually you come to understand it, and you end up where you are. You have 100% in it.
Lepard sees Bitcoin as part of a broader technological revolution that, like the internet, will reshape society on a fundamental level. Unlike the internet, which transformed information exchange, Bitcoin addresses the core of economic interaction: money. Lepard underscores the essential role of money in human society, noting that while we can theoretically live without the internet, survival without money is challenging. Therefore, the transformation of the monetary system via Bitcoin is arguably even more significant than the information revolution. Lawrence Lepard's perspective on the current financial landscape reveals the vulnerabilities in the fiat-based system and the increasing importance of alternative assets like Bitcoin, gold, and silver.
Please like and subscribe my channel.